right, everybody, you know the routine. Load up that chat box with all your questions, comments, concerns about buying a house. We're going to answer all your questions right here live, and you'll be on the right path of home ownership. So the thoughts that you have, the questions that you have, how much money do I need to make? What down payment do I need? Do I need to save money to buy a house? What credit score works best? What credit score can I have to buy a house? First house, second house, investment property, multi-unit, whatever it may be. Remember to load up that chat box with all of your questions, and we are going to answer them here live just for you. And the best thing you guys can do is give us a scenario. Let us know a little bit about what you're working with. I make this much money. I have this kind of credit score. I have this much money saved. I have a wife. I have a husband. I have a significant other. I have a co-borrower. Can my dad be a co-borrower? Can my boss be a co-borrower? All of the questions that you guys have about buying houses, we want to answer them all for you right here, right now. What do you got for us?
Pull up the rates. What do we got? What do we got today for the rates?
You don't know the rates?
I don't know the rates.
Dude, you do this for a living.
I do, but like Monday, we were quoting last week, 5.25. And we thought that it was going to go up, and it did. It went up to 5.375. This is, of course, the rates that New American Funding is putting it out. It is not my quote to you, but there's a way to buy a house, and we're going through one right now. Chris walked into my office this morning. Well, you didn't do D&D, man? What's your problem? You do on mine either? No. So Chris walked in and said, hey, Philadelphia, Pennsylvania, yes, we can do that. He walked in and he said, hey, I got this one client who owns land, and they want to build a house on it. But they're not going with the traditional financing of construction. The construction people are actually going to go at their own expense and build this property. And he says, how do you think this is the best to build this loan? He says, I have my ideas, but tell me yours first. And I thought about it for a second. I said, how much is the land worth? And he said, $200,000. I said, okay. In that scenario, I think I would do a one-time construct, and I would use the builder's finance as the third-party financing. If I did the one-time construct, they literally can get this whole thing financed, but the financing for the builder is the third party. You just have to get that approved. So that's one of the scenarios where you actually don't even have a property yet. And we can build the property from scratch, from land. This person only owns the land, and then they want to build a house on top of it. Has to be your primary residence, but yes, we can do it. That's what I came up with. What do you got?
Well, every day when we go through home loans, guys, there's always a different strategy. There's always a different problem that people are running into. And they're usually not problems. The banks have already figured everything out. It's just a matter of looking for what's the best avenue to go down. But most people don't have challenges. Most people don't have crazy things roadblocks that they're facing when they're buying a house. It's mainly just, do I make enough money? Do I have good enough credit? And most people are probably qualified and don't even know it. So a lot of people are like, hey, I don't have great credit, okay? I don't have great credit. Well, what do you have? A 680. That'll get you a house. What do you have? A 690. That'll get you a house. What do you have? A 630. That'll get you a house. So when it comes to buying a house, guys, you may be in range to actually finance. The question is, do you have what it takes to at least spend 5 minutes filling out an application to see where you stand? Literally, all you have to do is click on the link above. Take you about 5 minutes to put in the data. It'll ask you for some documents, and you can know if you could be a homeowner.
Brittany says, what FICOs? Wait a minute. First, I said, Ashley Hecklin says, yo, yo, yo. We say, what's up? Ashley, yo, 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 yo. See, I did 3, 4, 5 of them.
Eric,
how can I rent?
Eric in Philadelphia.
Philadelphia, Pennsylvania. No, I said we can do loans in Philadelphia, Pennsylvania. We can do loans in all 50 states. Let's go back to, how do I save if rent is so expensive? That's a real problem for Americans across the country. Across the country, it's ridiculously expensive. The good news is rates are coming down like a lot, which means you can buy more power, more purchase power, should I say. You have more purchase power with your earned dollar because interest rates are a big driver of how much you can afford. And now we have the one-time construct program and zero down programs. There are a lot of zero down programs, a lot of them. We'll tell you about some of them right here in just a minute, but zero down programs. We also have the one-time construct where you buy from just raw land. Look at the count. just right raw land, and you're able to build this thing up, and you can build your dream home. Like all of them do it. FHA does it, VA does it, Fannie Mae does it, Freddie Mac does it, USDA allows it. It's a little more difficult with USDA. But Brittany says, what FICOs do lenders use? We use the mid of your tri-merge on a FICO 5. That's real complicated. But the mid of a tri-merge on a FICO 5, and that's how we're able to qualify you for the house.
Yeah, guys, we can get you qualified right now. If you're interested in buying a house, go to the link in the bio, select apply for a home loan now, or if you want to talk about it, our phone number is also there. How do I save, man? How do you save for money? How do you save for a house? It's so expensive.
It's difficult. I mean, so like when this is like economics 101, when you're like, hey, I want to live a better life. Well, there's two ways to do it. You can either earn more money or spend less. And that is a very tricky subject, because if you pick a profession, let's just say you pick nurse. Nurse is a profession, a wonderful profession. You make a lot of money. Do you get rich money? No, you don't get rich money in a nurse. But do you make good money? Yeah, most nurses make between $50,000 and $150,000, which is across the country a very good income. However, if you make $50,000 and you spend $60,000, you're going to be toast, no matter what profession you're in. If you make $100,000 and you spend $110,000, you're toast. It's just broke at a different level. Same thing with 150 to 160. You're broke at a different level. So it's always that balance of what? And inside of that, there are mandatory expenses. The mandatory expenses are roof over your head, food, clothing. Now, if you have to eat, you have to eat. So you got to budget that in correctly. But roof is the biggest one, because that's what makes people rich and poor, because they're like, hey, I want a nice apartment. I've seen this. I follow this feed of this guy who goes to people who rent apartments in Austin, Texas for $8,000 a month. And they're young kids. They're like in their late 20s, and they're renting for $8,000 a month. Now, Austin, Texas is a very high-tech area, so there's a lot of tech guys that make $150,000, $200,000 a year, but they're paying $8,000 a month. That's $96,000 a year towards rent. And I sit there, now the apartments are amazing. They're beautiful. They got a view of all of Austin. It's awesome. It's beautiful. But when I look at it, I'm like, it hurts my soul.
Yep. Nettie Maria said, my in-laws offered us to stay with them for 1 year for only $700 a month to save and buy. And that is a good move, man. That is a move that a lot of people don't want to take, that we won't take, because I need my own space and I need my own place. But in that situation, you're probably going to be able to save a couple $1,000s a month, assuming rent somewhere between $2,000 to $3,000 a month. Now, here's the question that you need to answer. Are you actually going to save that money? Because here's what people do. They're like, wow, we have extra money. Let's take the whole family to Disneyland. Yeah. Wow, we have extra money. Let's go on a shopping spree. Got a new watch. Got a new car. You start spending that money because you think it's extra money, and you never get out of the rat race, okay? Some people get lucky in life, and they get little windfalls, okay? Little windfalls. Hey, come stay with me. You'll save a couple $1,000s a month. That's $24,000 a year. That's more than enough for down payment on a first-time home buyer. And in that situation, you can buy a house in a year. But when you get these little windfalls, are you actually going to invest it in yourself, or are you going to just blow the money away? For instance, I have friends that have gotten inheritances, and you know what they've done? Bought houses. And in that case, most people, you know what they do? Buy a new truck, buy a new car, go on a vacation. But if you actually take those little windfalls and invest them into things that you want, like a house that can potentially make you money or give you an opportunity to own a piece of America, then you got to make those moves, guys. You got to be a little, what's the word?
Stream of income? That's the big thing right there. I tell you what, people come to me for advice all the time. They're like,
disciplined.
What do I do
disciplined
in order to set myself up as I get on in life? And I'm like, listen, stream of income is way more important than assets. Stream of income, if you can figure out how you can get that stream of income and you hit hard times, the stream of income will carry you. But if you're always looking at assets, if you're always looking at, hey, my new Corvette, my new truck, my new this, my new that, then you're going to be long-term, that's going to hurt you. That's going to hurt you. But if you find something that is going to create a stream of income, like rental properties, that's a good one. Rental properties, huge one. And then if you can, get into your house And instead of having a mortgage on it, pay that bad boy off and use it on another rental property. Now you have the mortgage on the other rental property, but your primary is in good shape. You can do that, and that will create a stream of income. Stream of income more important than assets by far.
Destiny Leone, how long do you have to be at a job in order to get a house loan?
Destiny, 2 days?
Years.
No, 2 days.
2 years.
2 days. Destiny, we got two different answers here.
2 years.
2 days. I'm going to say 2 days. Because if you just started your job at Walmart as a manager 2 days ago.
And you've never had a job before that.
No. And
See?
you just left Target. And you left Target. And you worked at Target as a manager for the last 4 years. 2 days is the right answer. But if you've never had a job before, 2 years is the right answer.
Actually, it'd be 2 weeks because you need that first paycheck stuff.
Fair enough.
So 2 days to 2 years.
Yeah, 2 days.
Somewhere in that window.
Somewhere in that range.
You need to have a work history for 2 years.
Yeah, 2 year work history, but you can be at the job immediately. There's even certain loans. Yeah.
Jack in the Box.
There's even certain loans where I can actually get you in without you even starting the first day, as long as I have a strong offer letter. And let's just say you're moving from California to Arkansas. Not that that's a real scenario, but if I had a real scenario like that with the strong offer letter, I'm able to use the projected income, and then I have what's called a post-funding condition after we fund. I just need to see one paycheck stub, and everything's good to go.
And do you have 2 years at your job, Destiny, or multiple jobs? Let us know. Ashley Heiklin, with more purchase power, if a house has been on the market 80 to 100 days, could we ask well below asking?
Ashley, I would. If you have, it depends on the market. If you're in Florida, maybe that's kind of the norm in Florida. Florida's a really weird situation right now. But other than Florida, that many days on the market means that that seller's trying to sell. And if you have a good realtor, they already did a CMA, comparative market analysis, and they know what that property is worth. The market is the market. Doesn't matter who you are, where you come from, if you're a purple person, if you're a Democrat, if you're a Republican, doesn't matter. The market's the market. So after you have a CMA, comparative market analysis, you actually know what this property is worth. It's good. You'll know what it's worth. And then how much is this going to sell for? Because a lot of people, they're like, hey, I know my house is worth $500,000, but I'm going to put it on the market for $550,000, and if it doesn't sell, I don't give a shit. That happens a lot. So a brand new realtor who doesn't know anything will go, yes, I will take your listing. I will take your listing, but it's not even close to the market. So the client has no skin in the game whatsoever. Nothing. They'll leave if they can get their $550,000, but they won't negotiate because they don't need to sell. So you have to find those scenarios, those little pieces of the scenario to fill in all the pieces of the puzzle. If you have a motivated seller, they'll probably take less. If they're just kicking tires and going, hey, I was hoping I can get $550,000, but if I don't, I stay here. That's a different scenario. So hope that helps.
Yeah. Nettie Maria, we might do it. We're paying $2,000 a month. That's $1,300 a month in savings. What's the math on that, Lee? About $15,000, I think, right?
Somewhere in that range.
That's about $15,000 that you can save this next year.
In 1 year.
What can that get you? If you have $15,000 in down payment, how much house can you buy?
$450,000.
$450,000, Nettie Maria.
I had to do some math. It took me a second.
Yeah, the math. Teddy, thank you for the love. User 6131 locked out a 5.75 FHA on a new build that doesn't close until December. Will rates drop lower by then? Locked? What month are we in? That's a 4-month lock.
You sure you're locked?
Yeah.
You sure you're locked? That's hard because 90-day locks are, one, they're expensive, and 5.75 on unless you're using a 2-1 buy down, because if it's a builders lie to you, by the way. They tell you the truth. They do? Yeah, they tell you the truth and they lie to you in the exact same sentence. How do they tell you the truth and lie to you in the exact same sentence? I'm about to show you, I think.
What's up, Bernie? How you doing, man?
Bernie? What Bernie?
What's up, husband, wife, Lozano?
What's up?
What's up, Miss Inland Empire?
So, I'll tell you how they tell the truth and they lie to you at the exact same moment. If you go to YouTube and you say, hey, are foreclosures happening right now? They'll say foreclosures are up 200%, 300%. It's amazing. There's so many foreclosures because of the recession, because people don't have jobs. It's amazing. Foreclosures. And they're not actually lying to you. They're just not telling you the whole truth, because this is the foreclosure chart. This is the foreclosure chart, starts in 2003 and now here in 24. If you look at this, all the way up here, this is 2008, 9, and 10. That's when the massive foreclosures were happening. Well, this right here, where there's almost none, was a foreclosure moratorium, which because of COVID, it was illegal to foreclose. Then, once foreclosures were legal again, they've gone up. And if you listen to them, they say foreclosures are up 300% because of the recession, and they're scaring the shit out of people. But if you actually know the numbers, it's a bunch of crap. Now, the way the builders lie to you is they go, hey, listen, yeah, you know what? I'm going to give you a 7.5 rate. You're like, 7.75. You're like, I don't like 7.75. Do you like 6.75? I like 6.75 better than 7.75. Do you like 5.75? I'm starting to like that way better. All right, cool. Tell you what, if you buy right now, I'll get you a 5.75. And you're like, really? You'll do that? Yeah, I'll get you that 5.75 for the first year, no doubt about it. And then after that, it'll go up to 6.75. Then it'll go to 7.75. But then you've already saved so much money, it doesn't even matter anymore. And you're like, hey, that's a good idea. I'll lock in that 5.75. What they used was a 2-1 buy down. And if it was those numbers, they probably used 20 grand to buy it down. 20 grand. You know where that 20 grand is usually better? Principal reduction. Principal reduction. You say, hey, listen, instead of that 5.75, you have a good realtor on your side. If you're using their realtor, this will never work because it's just not going to work. The realtor works for them. But if you have your own private realtor, the realtor is going to come in with these strong terms and go, hey, listen, I'll take that 20 grand, but I'm not going to use it for the 2-1 buy down. I want a principal reduction. They're like, no, you can't do that. I'm like, yeah, technically you can. If it's in contract and you offer me 20 grand, I can use that wherever I want, right? Right. Well, I'm going to use it for principal reduction. Now that's the hack. That's how you do it. But the builders don't want you to do that because there's a lot of money in this for a builder. If you really want to know, ask and I'll teach you how builders make a fortune without you even knowing it. And I'll give you like 10 different ways.
Yep. Nettie Maria, laughing my ass off. No, my husband is always in my ear about spending. Told you. Mm-hmm. Plus, kids are almost teens. We need to do it. Yes, you got to do it now because a lot of people are going to miss the boat. It's going to sail away. Prices are going to keep going up. Even when rates get better, guys, it doesn't make stuff cheaper. Because if rates go down and prices go up, your mortgage payment basically stays the same. You're just buying at a more expensive price. So factor that in. But Nettie Maria, you want to talk about it? Give us a call or go to the link in the bio and select apply for a home loan now. Sam TZ23. What is the minimum down payment percentage for a conventional loan in Pennsylvania for a first-time buyer?
Okay, Sam, it's 23. Here's the technical answer, then I'm going to give you a practical answer. The technical answer, minimum down payment, 3% on Home Ready, Home Possible, but I could probably put you in a down payment assistance program. So 0. So that's the textbook answer. Now let me give you the practical answer. If you have a 780 FICO score or better, Home Ready or Home Possible are great programs. But if it's below 780, I've got to really put it up in competition up against FHA. Because FHA you can get in for 3.5% down, but the MI is set at 0.55. See, if you're only putting 3% down, you still have to buy mortgage insurance. And if your FICO score is coming in lower at 622, your mortgage insurance is going to be ridiculously expensive. I told you FHA is 0.55. I've priced the 622 FICO recently, came in at 2.97. That was ridiculously expensive. So, from a practical perspective, with a 622 FICO, you are way better off on an FHA than you are on a Home Ready, even though you can get in for 3% down. It's not, FHA is way better in that scenario. If you have a 780 FICO, Home Ready or Home Possible, way better program, way better. But you have to have a very good FICO because of the MI. Now, after we qualify you for a program, let's say we qualified you for FHA and Home Ready, both of those programs. And then we go, all right, you live in Pennsylvania. That's what it was, Pennsylvania, right? Mm-hmm. You live in Pennsylvania. Let me find the local down payment assistance programs in Pennsylvania. You know what? Let's just go with a national one. We have a national program at New American Funding where we can get you in with 0 down. any state in the country, 0 down program. But you have to have a good FICO score, and none of the down payment assistance programs are free. None of them. There's a catch on all of them. So, hope that helped.
Sam, what part of Pennsylvania are you in? Saying, is it easy to get a loan of a $10,000 for a down payment on a Section 8? Get a
Is it
loan
easy?
of
Yeah.
$10,000 for a down payment on a Section 8.
Sage, I got bad news for you. You're probably watching Tom Cruise. Tom Cruise is this big guy on Section 8 who's telling everybody, hey, this is how you get super rich. Just send me $5,000 and I'll teach you how to get super rich. It's hilarious. I dug into it deep. I know it pretty well. And it's not that what he's doing is bad. It's actually, it works, but it's not working. He's selling courses, man. This guy's making a fortune selling courses. Respect. This is America. You can do it. And I actually believe he is good at Section 8. But the way he puts it out there, it's not, yeah. So technically, on all of the loan, on all of the Fannie Mae, Freddie Mac, FHA, USDA, and VA, you can't borrow the money for the down payment. Strike that. You can borrow it in some cases, but it's very, very critical. Like, can I borrow it from my 401k for the down payment? Yes, I can. So in a situation like that, you can. But if you're looking to just kind of become an investor and you want to borrow the 10% so you can put Section 8 people in, probably not going to happen.
Yeah, Destiny Leone. What if you haven't worked for 3 years?
Destiny, bad news for you. Bad news for you.
That's not bad news.
Well, okay, Destiny. If your only source of income is a job and you don't have a job, then you don't have income. And if you don't have income, no loan. However, if you're a trust fund baby and you make $10,000 a month from your trust fund, but you haven't had a job in 3 years, I'm still able to use that $10,000. Let's say you're Native American and you get $18,000 a month from the tribe. You ever seen that?
Yep.
$18,000 a month from the tribe. Can I use that? I sure can,
Yep.
even if you don't work. Even if you don't work. Let's say you're on Social Security and you're like, hey, I've retired. I haven't worked in 3 years. Cool, I use Social Security. Let's say you have VA disability income. I use that VA disability income. Let's say you have Social Security disability temporary. All right, cool. I can use that. There's many incomes I can use. But if your straight question is, I haven't worked in 3 years, I don't have an income, no loan. That's it.
Yeah. Live in Arkansas, it's Chris and Lee.
Yep.
User 2111 asks, are you live in Arkansas? I hope so. I hope we're live in all 50 states right now, because where do we do loans?
Do we live in Arkansas? Are we live in Arkansas? We're
You guys
live.
live in Arkansas? Live. Are you guys live in Arkansas? Anyways, we can do loans in all 50 of the states.
All
So
50 of
whether
them.
we live or we're live in Arkansas, we can do loans in Arkansas too.
Boom, Arkansas. I've
Actually,
actually done one
Highlands in
in
Delaware,
Mena.
man.
I did one in Mena not that long ago.
Our cyclone's in Delaware, man. She's in Delaware.
Delaware. That's a DE, man. That's a DE.
Day.
Yep.
Destiny Leone. I worked for 13 years, but I haven't worked in 3.
Okay, so Destiny, if there's a reason why you haven't worked, if there's a reason, and I can prove that you have worked prior, there's a small exclusion in the guidelines that say, I haven't worked, but I went back to what I used to do. So let's say I was a nurse, and all of a sudden I had a kid, and the kid had special needs, and I couldn't work. All right, cool. Now I'm back into a situation where I can work again. And I go back to nursing that exact same hospital. 6 months back on the job, right? 6 months on that situation. 6 months back on the job. After 6 months, they go, oh, so you used to work. All right, prove it. Okay, cool. Why did you stop? Okay, because you had a kid and his special needs. Okay, cool. And now you're back 6 months. All right, cool. Yep, we're good to go. That's what it is.
Nice. Ashley Heikland coming with the shrewd negotiating. They're asking $345 for the house, but she's gonna try to get it for $300 to $305.
Make sure you have a good realtor, man. Make sure you have a good realtor, because
Always the
a
recommendation.
good realtor can really help you in that situation. Make sure you know the market. Yeah.
Diana Oliveros, realtor. Ironic, realtor. Okay. How long do you take to respond to clients and realtor calls? Asked Diana Oliveros.
We'll take them like right now.
Well,
I
not
mean, not
right
right now, but as soon as we're done, we're done right now. and you call us at the end of the live, we'll take your call.
Yeah. Here's the challenge with that, though. Here's the challenge with that. I would say text because if a call comes in, it's priority where that call goes. Okay. So let's just say a call's coming in, we'll take that one. You're calling behind it. You're on the wait. Let's say we hang up, another call comes in. You're still waiting. So if you text, we're gonna respond to that in order too. But the probability of getting responded to a text is much higher.
Yeah, you're gonna if you text Chris right now, like right now. Say, "What's up? This is Diana Oliveras, realtor," and Chris will text back. And if he doesn't, text Lee, and Lee will go, "What, Diana? How? Let's get that house. Let's get that house."
We need to get that house. User 1917 said, "Talk to me about VA loans."
Okay, VA loans. First off, you have to be a veteran. Talk to me. Let me get a look at that FICO.
I'm going to tell you, thank you for your service.
Yeah, thank you for your service. Okay, so VA loans. First off, here's the hits that people are like, hey, this is so amazing. Every VA lender knows this. It's 0 down. 0 down. How much? 0 down. All right, cool. There's no loan limit. If it's your first time use and you have a clean entitlement, no loan limit. You can go up to $20 million if you wanted to.
Damn.
On a VA loan, no loan limit. That happened about
I think about $5 million
2 years ago. No, I don't think so. Actually,
think so.
You have to put money down at that point. But no loan limit. It says no loan limit. Anyway.
No. I'm talking about what we lend.
Oh, what we lend.
Yes,
Yeah.
what
The
we
VA doesn't. The VA's guideline goes forever.
Fair enough.
So if you're over $5 million, I'm probably not the right loan officer for you.
Damn it.
Yeah. I know Christoph Chu though. He probably knows. Anyway, VA loan 0 down. No mortgage insurance, which translates into you can buy more money, more house. What does that mean? If you went FHA, you would have 0.55 MI. 0.55. So after all the numbers and everything, it turns into you buy less house. So if you were qualified for $500,000 on a VA, you'd probably be qualified for $480 on an FHA because of the MI. If you went conventional, you are going to have mortgage insurance unless you put 20% or more down. So it translates into you can buy a little bit more house because there's no MI. And VA is a very easy underwriting. How easy do you think it is?
What do you mean? That's relatively speaking. Give me something to chew on, man. What are you talking about?
So if I send through a VA loan with a 620 FICO and I send through a Fannie Mae Freddie Mac loan with a 620 FICO, exact same scenario.
All right.
Which one's going to get approved quicker?
VA approved all day.
Why?
All
Why?
day.
Behind the scenes. What happens is the VA doesn't lend you the money. It doesn't. It doesn't lend you the money. It guarantees the loan. So what that means is they say, hey, Mr. Bank, if my veteran defaults, I'll write the check. And the bank's like, you'll write the check? And they're like
those odds.
I'll write the check. You have no risk, Mr. Bank. No risk. So the bank goes, shit, I got no risk. I'm more likely to give these loans out because if anything defaults, the VA writes the check. That's why. That's behind the scenes.
Hell yeah.
There's a lot of really, really powerful things for a VA loan. Now, you need a skilled VA loan officer. I've seen this happen. So somebody who just got out and he filed for service-connected disability, but he hadn't been granted it yet, started to buy a house. He got a certificate of eligibility. It's called a COE from the VA. The VA sent back and it said non-exempt. All right, no big deal. Nobody knows what this is except the loan officer. So they go through the VA loan. Yay, we're approved. Okay, cool. In that process, the veteran got awarded 10% service-connected disability. But he didn't tell his loan officer because it's none of his business. All right, cool. They went through and funded the house. This is a $500,000 house. Now, they paid what's called a VA funding fee. VA funding fee can be very expensive, up to 3.3% of the loan amount. So on a $500,000 house, that's about 18 grand. So the veteran says, hey, I don't understand why I have to pay this fee. Oh, all veterans have to pay it because he doesn't know what he's talking about. So they fund the loan. He paid $18,000 on top of the $500,000 just built into the loan, and he doesn't even know he did it. Skilled loan officer would have said, hey, wait a minute. Whoa. I know when we started this process, my COE says non-exempt. I need you, Mr. Veteran, to send me that 10% exemption that you got from the VA, because I'm going to go back to the VA and I'm going to fight for your exemption because I know what I'm doing. Now that you're 10% service connected, your VA funding fee is waived. But the only way you know this is if you do a lot of VA loans and you understand what you're talking about.
Yeah. So user 1917, you're in Georgia. Can we be your lenders? Of course we can.
All day, every day.
We're going to help you get a house, no doubt.
All day, every day. Call Lee.
Time for a commercial.
Yeah. If you need a badass loan officer, call Chris and Lee at New American Funding. Your badass loan officers are Chris and Lee. That's Chris. That's Lee at New American Funding. We will help you get your loan. This is going to disappear in 5, 4, 3, 2, 1, bye.
Nice. Raquel Garcia, I have an 835. Show off.
That's a badass.
That's a
badass
credit
FICO score.
score.
I'm not going to lie. That's a badass FICO score.
Raquel, you baddie.
Yeah.
Loans by Leslie. Yes.
Yes.
I don't know what you're yesing, but yes.
I don't know who Loans by Leslie is, but I knew a Leslie once. She was pretty damn good at building loans.
I know a few Leslies in my
She's pretty
life.
damn good at building loans. I'm not gonna lie, she was pretty damn good. I didn't always get along with her, but she was pretty damn good at building loans.
Gilded Heart. Is there an assistance program for nurses and disabled people?
Gilded Heart. There are down payment assistance programs that are across the board. Here's a sad part about the mortgage biz, and it's kind of like all biz. They package things up to make it sound like it's just for you, but it's not really. There's a marketing program like, hey, I got special loans for police officers. I got special loans for nurses. I got special loans for this, special loans. They'll give you a little bit of a little
benefit.
Benefit? Yeah, benefit's a good word. They'll give you a little bit of a benefit, but not enough to move the needle. The programs are the programs across the board. Across the board. The one exception to that is veteran, but you earn that VA entitlement. It's a little different.
Yeah, what are the benefits of Home Ready program?
So the big benefit of the Home Ready program, 3% down. That's about it. It's a program where you can get in Fannie Mae. No. Let me give you one more. I just thought of it. If I went with an FHA and I put 3.5% down, that 3.5 of the MI of 0.55 will be there for life. If I went with a Home Ready and I had a good FICO score, I could get in for 3% down. The MI will fall off at 80% LTV or 78%, depending on how you do it.
And no upfront mortgage insurance.
And no UFMIP. Thank you. Good catch, dude. So let me talk about that for a second. FHA has something called UFMIP, upfront mortgage insurance premium, and it's FHA's way of saying, hey, you got to pay to play.
A lot of you are going to default.
Yeah, a lot. You gotta pay to play, and you're like, who pays this? Everybody. They don't even talk about it. It's just like 1.75% of the loan amount. 1.75% of the loan amount. Every FHA loan, it just gets tacked on top. Nobody even talks about it. Very few people even ask about it. They're like, what's this FHA 1.75 UFMIP? It's just an extra fee. FHA just like to slap you on the back of the head. You want to use my loan? Bah, 1.75 before we start. You mean that's all the mortgage insurance I have to pay? No, 0.55 every month for the rest of your life or the life of the loan. Yeah.
All right, Raquel Garcia with her 835 FICO. If I want to purchase a second property in California, what's the best loan?
You don't have a lot of choice, Raquel.
There's two.
Yeah, you got two choices.
Two.
I'm going to give you the scenario based on what you said, and then I'm going to change it up a little bit. Second home is a category. There are 3 categories in lending. Primary residence, that's where you live. Second home, that's not your primary residence, but you also live there. That's your home. It's called second home. And then investment property. That's where you rent it out and you make money. Okay, cool. So, is second home an investment property? No. It gets better rates than investment property. It gets better criteria than investment property. But it's not primary residence either. So, real simple. Primary residence, 3.5% down. Or 5% if you go Fannie Mae, Freddie Mac. Second home, 10%. I hear something.
Yeah, I did too. I think it's outside.
So, second home, 10% down. Investment property, 20% down. So, real simple. 5%, 10%, 20%. So, if you're getting a second home, now what is a second home? well, let's just say I have a primary residence in California, not that I'm talking about me, and I have a second home in Austin, Texas on the lake. I don't really rent it out because I go there from time to time quite often. Well, I actually travel to my second home. But in order to get that second home, I needed 10% down, and the big kicker was 6 months reserves on all properties that I own. That's the big kicker. So once you get past your primary residence, the bank wants to know, if you lost your job, could you pay for the mortgage on all your properties for the next 6 months or 12 months or 2 years sometimes? So that's the big kicker. So that's if you're trying for a second home. If you're trying for your second home that will be your primary residence, different criteria. Like, hey, I live in this house right now, and let's just say it's San Diego, California. I live in this house. It's awesome. It's amazing. But I got a new job in Los Angeles. So I'm not going to give up this house. I'm going to rent it out. And I have a Fannie Mae loan on this house, and I'm going to rent it out. And thank God I can rent it out for $4,000. That's what the mortgage is. Perfect. It zeroes itself out. And I need to buy a new house in Los Angeles, 3.5% down, because it's your primary residence. Even though in your world, it's your second home because you own one in San Diego and you now own one in Los Angeles, it is now your primary residence. And because you didn't use FHA on your San Diego home, your FHA is available to use on your primary residence in Los Angeles. Hope I answered your question.
Nice. And good job on that 835 again. Sam, how you doing, man? I live in Philadelphia, Pennsylvania. He's in Philly, man.
Philly.
Sing a song with Philadelphia in it.
I like Philly cheesecake. That's it. That's what I got, man.
West Philadelphia, born and raised. Come on, man. You can do better than that. Use your 4481. How do you get $18,000 a month if you're Native American?
Yeah, that's what I keep saying, man. That's what I keep.
So I think I'm Native American.
Yeah, this.
I think I am.
I did a blood test after I found that. When I first entered the loan business, I had this kid come up to me, and this kid, maybe 24, 25 years old, he's like, "Hey, I want to buy a $600,000 house." I'm like, "You're 24. Do you work?" And he goes, "No, but I get some money from the tribe." And I'm like, "You're 24 and you want to buy a $600,000 house?" And he goes, "Yeah, I get money from the tribe." And I was like, "Okay, cool. How much do you get?" He goes, "About 18,000." I was like, 18,000 a year? And he goes, no, 18,000 a month. And I said, 18,000 a month? Now, I'm a brand new loan officer. I don't know this exists. And I said, "Can you give me proof?" "Oh, yeah, sure. No worries. Proof." So, sure enough, a letter from the tribe that says you're getting $18,000 a month. And I'm sitting there going, "Chris, have you ever seen this?" And he's like, I'm like, 18,000. So I'm like, I don't even know what this is, but I'm going to pull credit. 550 FICO score. I'm like, 550? Yeah, he's got a Cadillac, a Corvette, and because he has that money, he didn't work for it, just kind of spends it. And unfortunately for that kid, I wasn't able to qualify. I did run into many other Native American loans. There's a big Native American place here called Morongo. Morongo's the biggest one, probably?
Morongo, San Manuel, Pachanga.
Which one's the biggest? Morongo?
Probably San Manuel.
San Manuel? Okay, I think it was the San Manuel. So the bigger the casino is and the smaller the tribe is, it's just distribution. So if this person's a member of the tribe and they're part of the casino community, they just get their portion of the income. And they have to prove it, and they really do. They're set up too. They're very dialed. When they come to a loan officer like me, they know exactly what it is. What's the name of the loan?
Section 184.
Section 184 loan. It's called a Section 184 loan, and we have to deal with the tribe. We have to get proof of the income. We have to prove that it's going to go forward. They even have special allotment for down payment. The tribe will even cover the down payment. So if you're Native American, you know this. It's not. I'm not telling you. If you're not, you're just kind of not. It just doesn't exist for you. So yeah.
Yeah, do your 23andMe, guys. Let's figure this stuff out. Mia Love. Realtors lose if they ask for less on a home. They ask full price. You got to know your market.
Yeah.
You got to know your market. So everywhere across the board, okay, if you just look at the big data, houses are going up in price. But there are pocket communities all over the country. And what I mean by pocket community is Like in my neighborhood, it's a community kind of, it has its own name. And then next to it, there's another community with its own name. One of those could be going up or down at any given time depending on the supply and demand and the desirability of the neighborhood. So in pocket communities, there are some across the nation that are going down. And in those situations, you can negotiate the price. Name a couple of communities that we know of offhand.
Austin, Texas.
Boom.
I watch the housing prices in Austin, Texas. I'm looking for an additional house as an investment property in Austin, Texas. And I watch the prices go down, 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 down. I'm like, I don't know if it's I got to think about this. I've actually put an offer on a house not that long ago. So, Florida. Tallahassee, Florida. Tallahassee, Florida. Yeah, Orlando, Florida. Orlando. There's a few places that are going down.
Yep. So that's not an absolute, but if you can do your research, you can figure that out. User 7358 VB Pitrix.
Shared the live. They shared the live. Appreciate you sharing the live. We appreciate you.
LA owner for a first-time homebuyer. What programs do you have? Self-employed first-time homebuyer.
Okay, first-time homebuyer is different than self-employed.
Owner.
So, first-time homebuyer, there are two main programs out there. They're called for first-time homebuyer. Now, don't get this confused with FHA, but there's two main programs. Fannie Mae, Freddie Mac, Home Ready, Home Possible. And those are first-time homebuyer. But a lot of people confuse that with FHA because FHA is 3.5% down. That's not first-time homebuyer. That's primary residence. It's a little different. First-time homebuyer, by definition, is someone who hasn't owned a home in the last 3 years. That's it. So if you owned a home 10 years ago, you're a first-time homebuyer right now. So the two programs across the board, Home Ready, Home Possible, those are first-time homebuyer. But don't confuse that with FHA, 3.5% down. 3.5% down is primary residence. It's not first-time homebuyer. You could have owned a FHA home yesterday and bought a new FHA today, as long as you got rid of that FHA loan, and you're good to go. So the two big programs are Home Ready, Home Possible. Those are them. And the benefit to Home Ready, Home Possible is that you can get in for 3%. 3%. Now on FHA, you can get in for 3.5%. But if you went Home Ready, Home Possible, there is no UFMIP. UFMIP is on an FHA loan, and that's 1.7%, 1.75% of the loan amount. So if you went Home Ready, Home Possible, you wouldn't have that UFMIP. However, if you do not have a great FICO score, Home Ready and Home Possible are probably not the right program for you. By great, 780 or better. 780 or better. Why? Because on a Home Ready, Home Possible, we have to shop MI. When we shop MI, you can go MI. The last one I priced at 622 FICO came in at 2.97 MI. 2.97 is an extra monthly payment that costs so much, it's not worth it. It's not worth it. Why? Because if you went FHA, your MI is set at 0.55 if you put 3.5% down. If you put more than 5%, it's 0.50. It doesn't go lower than that. But 0.55 or 0.50. So if you came to me with the 622 FICO, I'd be like, I'll show you Home Ready. I'll show you Home Possible. I'll show you the mortgage insurance. And I'll show you dollars for dollars, orange to oranges, apples to apples on how FHA is better for you. Now, if you have a great FICO, like I priced a Home Ready with an 800 FICO and the MI came in at 0.19. 0.19 is way better than 0.55. So it is a case-by-case situation. Your FICO drives it a lot, but don't get confused with the first-time homebuyer programs, because brand new homebuyers walk in like, I want my first-time homebuyer program. It's not all it's cracked up to be. It's just the way that the mortgage industry kind of sells you into things, and it's a bunch of bullshit until you actually understand what it is. And then there's a little teeth in it, but only if you're in this perfect category.
All right, guys, if you want to get your process started, go to the link in the bio, select apply for a home loan now. Our phone number is also there. If you want to talk about it, we can talk through the scenarios. Nail Tech, how long does underwriting take?
Nail Tech, underwriting, the actual term of underwriting in today's market, 48 hours, maybe, 48 hours, maybe. But that's only if you have a loan officer who's telling you the truth. And most of them, to my experience, they don't really tell you the whole truth. Here's why. Because once you send it to LO, we're the first entry point. And we put together a loan, and we calculate your income, assets, pull your credit, and we build a loan. Okay, we built a loan. We use computer program called Encompass. There's other ones like Calyx Point. There's a whole bunch of others. But we build the loan. And then we transfer it off to a processor. Now, because they're worried about the big F word in mortgage fraud, they're worried about the big F word in mortgage, they actually segment these things off so nobody can lie all across the board. So as soon as I'm done with that loan, I package it off and I send it to a processor. The processor then goes, okay, I'm going to tighten this up a little bit. I'm going to do a VOE, which is verification of employment. I'm going to do a VOR, which is verification of rents. I'm going to do all of these different things that the loan officer doesn't do. So the processor is going to take it. As soon as the processor has this all packaged up, then they send it to underwriting. The underwriter does nothing but review it. The underwriter goes, okay, let me see if this income is correct. Okay, here's what the loan officer came up with. Here's what the processor came up with. Here's what I come up with. If they all match, you're good to go. Underwriting is usually 48 hours tops. 48 hours tops. Now, in very busy times, like during COVID, there was a very busy time, which underwriter was 96 hours, 4 days. So 96 hours, that was the longest I've ever seen underwriting, because the underwriters don't want to hold the file. They're like, cool, I get this file. You can't even talk to them during the process, because they're like, I get this file. Here's all the documents from the loan officer. Here's all the documents from the processor. Now, let me see if I agree with everything they said, and let me run my checks. And after they run the checks, they go, okay, cool. Here's my condition list. They send it back to the processor. The processor sends it back to the loan officer, and then we go through and get the conditions. So that's how it works.
You sure you explained enough? I think they're missing data somewhere.
All right, cool.
Nail Tech, what's your challenge? Are you in underwriting and it's taking longer than you expected? Did your loan officer say it's in underwriting and maybe it's not? So Nail Tech, tell us what's going on with your file. CM Drayan Kozkowski.
Wow.
1003.
Ski
1003.
1003. Wonder if that's a loan officer.
What are the interest rates looking like right now?
Yeah, I wonder if that's a loan
for a first-time home buyer.
1003. You made your name 1003, and you think that loan officers are going to catch it. By the way, the universal residential loan application is Form 1003. Any loan officer knows I need to fill out the 1003. So right now, if you went to New American Funding website, you would see 5.375 on a VA 30-year fix. You would see FHA 5.375. You would see a 15-year fix, 5.25, and a 30-year fix at 5.75. Don't believe me? Go to the top of the profile. You'll see cool stuff, today's rates, and you'll see what I'm seeing.
Solito Jose, best loan to use to build an addition on my primary home.
You only really got two options, Solito. You only got two options.
A few.
No, well, I'm going to give categories. Cash out refi, HELOC.
Okay, fair enough.
Cash out refi, HELOC. Now there's inside of cash out refi, FHA cash out refi, VA cash out refi, Fannie Mae, Freddie Mac. I don't think you do USD cash out refi, but cash out refi or HELOC. You only got two options, so depends on what your current interest rate is and what you're going to do. So call us, we'll help you out.
I'm assuming you ask questions like that because you want to Google it and research it. Here's the problem with that, is that the data that you get when you Google is so limited and then so vast at the same time. It is very complicated. Here's the best thing to do, guys. Just call us.
Yeah.
Just call us. We'll walk down your path of your specific scenario and you'll be able to get better data. Google's a mess. It's a hot mess. Ace Slim. Can you get earnest money back if the lender says the condo is not VA approved the day before closing?
Ace. First thing you need to do is fire your loan officer. You need to fire that loan officer.
The day before?
You should have never been in contract. Your loan officer sucks. Your
Sorry,
LO
man.
sucks.
Sorry, Ace.
Yeah, your LO sucks. Because any good loan officer would go, hey, before we get into contract, let's see if this is VA approved. There is a very distinct way you go through that, also for FHA. And it usually has to do with ownership. So there's a way to do it. Now, here's the deal. If you've got a great realtor, you don't have any trouble. You're not going to have any problems at all if you have a great realtor. Why? Because they should have not released any contingencies, because your underwriter should have said, hey, this condo's not VA approved. Your underwriter, your LO should have caught it before anything. Your LO should have never, you should have been like, no, don't look at that. You can't. You just can't. No, and then no. Then your processor should have said, Hey, no. Hello, you stupid idiot. Sorry. Nicely, you stupid idiot. Why didn't you catch this? This is not VA approved. This condo's not VA approved. The processor should have caught it. Then the underwriter should have said, guys, what the hell are you even doing on this side? You should have caught it. So the loan officer should have caught it. You should have never been in contract. Your processor should have caught it. And your underwriter should have caught it. But more important than that, your realtor should have caught it.
Both of them.
Your realtor should have caught it before you went into contract. Sorry, I'm a little upset, but this means somebody got hurt because a loan officer didn't know how to do their job. Your loan officer is crap.
So what usually happens, guys, is the agent would have asked the loan officer, hey, is this VA approved?
Yeah.
And then the listing agent that's selling the property should have already known what type of financing is allowed on those types of properties. So I blame the listing agent, I blame the buyer's agent, and it's the LO's fault. It's the LO's fault.
Yeah. Well, the agents aren't really skilled.
These
not
sound like
all
new
of them.
agents.
Sometimes they're skilled,
They sound
sometimes
like
they're
new
not.
agents.
The barrier to entry for a realtor is very low. So there's some really great realtors. I love them.
Fantastic ones.
But most of them don't know shit. Most of them don't know shit. I like working with the high level ones. It's amazing to watch them work. I just back up and go, wow, that was cool. And then, but the low end ones, and most of them, I'd say 85% of the realtors, they're just, someone told me you're very good looking, you can make a lot of money in real estate. And they went out and got a real estate license, and they're like, hey, do you know I'm in real estate? Look at me, look at my headshot. Oh, look at me at Cabo. Look at me in my new Mercedes or my new BMW.
White.
They don't know shit.
4 doors.
Yeah, they don't know shit. Sorry.
So we work
Dude, I'm getting a little harsh here.
We work with some of the best agents in the nation, guys. So let us know if you need us to introduce you to one. Okay, we got a rapid fire, man. You ready to rapid fire?
Well, can you get your earnest money back? As long as your realtor did the job and your LO did the job, none of your contingencies were released. Your loan contingency should have never been released. Never.
All right, rapid fire.
Okay.
Coffee. What's the best score to buy a house on a $230,000 property? I'm assuming that's $230,000.
I want coffee right now. I'm not gonna lie. I do want coffee.
My daughter wants to buy a house.
Okay, so the best score, 800 or better.
850.
Yeah, 850. I've never seen an 850. I've seen an 846, but I've never seen an 850. 800 or better. However, if you're looking for what qualifies, FHA 580, Fannie Mae Freddie Mac 620. So at 580 FICO, I can start to get you a loan. Not going to be the best loan, but I can start to get you a loan. 620 Fannie Mae Freddie Mac, we can move forward.
Fred G, I need a HELOC, but only have bank statements as proof of income.
What do you say?
If your file is strong, you have a good LTV, loan to value on your property, and great credit, that shouldn't be a problem.
Cool.
Nail Tech, how long does underwriting take?
48 hours.
Mo Money, is HOA safe?
That's like our taxes safe. HOA is homeowners association, as I see it, unless you're got it a different way. But HOA is a mandated fee inside of a community so that they can have a little guy in a golf cart who couldn't make it into the real police come by and tell you got to cut your lawn or he's going to take some serious action against you.
HOA police are nothing to mess with, man. They are hardcore. Landon, I'm doing a soft credit check with my loan officer. If I get approved and VA gets approved,
don't Landon. If you're I don't know. Landon, if you're trying to get a loan and you're really serious about getting a loan, decline block. If you're really serious about getting a loan, don't try soft pull, don't try and play games. Do a full hard pull tri-merge. That's the only way to do it. If you got a LO telling you, "Hey, I could do a soft pull," that's a false positive. It can be wrong a lot. So make sure you get an LO who knows what the hell they're talking about. If somebody tells me soft pull, I'm like, yeah, go to somebody else. I'm like, if you're serious about getting a house, I'll get you a house. But if you want to play games with, hey, I want a soft pull, only pull one, I tell them, I'm not the right guy for you. I'm not the right guy. Go somewhere else. And they usually come back to me after it fails.
I'm Andrea Eunice. Do I need a down payment in my bank account before getting pre-approved?
Not necessarily, but you should have some kind of money. Because if you're saying, hey, bro, lend me $500,000, but you have nothing in your bank account, the bank goes, I don't know if this is a good idea. So you should have some money.
Fred G, do you do HELOCs?
Yes, all day, every day.
Max Martinez, how do incentives work? How does incentives work?
They incentivize you to get a better rate. Depends on what incentive you're talking about. So when I do pricing on a daily basis, So I'll pull pricing and I'll get 7.25, 5.25 all the way to 7.25. So there's like 200 basis points. And then there's the sweet spot. Let's say it's 6.25. That's today's rate, 6.25. That's the sweet spot. That's par. And then it'll say, all right, it'll cost you $1,000 for this, $1,000 for this, $1,000 for this, but only $200 for that. And they're like, wait a minute, why? Because they're incentivizing you to take 5.75 right now. That's how incentives work.
America's Finest. Hi, my mom has a property to her name, but mortgage is under my dad's name. Can she refinance into an FHA?
My mom has a property to her name, but the mortgage is in my dad's name. Maybe.
It has significant equity.
Maybe. That's a maybe. You'd have to call us. That's a maybe. There's something called continuity of equity. And continuity of equity says I have to have equitable interest for either 3 months or 6 months, depending on the scenario. But continuity of equity comes to mind on that situation. And if we can't do it right now, we can probably retitle so that it can happen in 3 months. So call us.
America's Finest. It has significant equity. Yep. Okay, more money. Is capital gains taxable?
By definition, yes.
April Jones. Hey, Chris, did you find any help for us? Chris Jones, VA. Yep, text him earlier to have him check his phone. Mia Love. Our offer was accepted, but it says as is and no warranty. What happens if an inspection doesn't?
You take that. I kind of don't get it.
If an inspection doesn't what? Our offer was accepted, but it says as is, no warranty. What happens if an inspection doesn't?
Well, so Mia Love, let's just say you're in California. A lot of states have rules kind of like California. Some are stricter, like Texas is stricter. But if you're in California, we have a 17-day inspection period whereby you can cancel for any reason that you want. Any reason. So within those 13 days, if you don't like anything about the property, I don't like the way the roof looks, I don't like any inspection, you can cancel. Then after you release contingencies, you release that inspection, you can't cancel for those reasons anymore. So the warranty is different. The warranty is after you own the property. Will this refrigerator still work or whatever? But the contingency periods are very important, and you need a good realtor and a good loan officer, because the next one in California is called your loan contingency. And on the California Association of Realtors contract, the CAR contract, it's 21 days standard, but can be adjusted, 21 days standard for loan contingency, which means your loan officer has to come back and say, I can do this loan. Because when you're pre-approved, it's not underwriter approved, it's AUS, Automated Underwriting Software, approved. After the underwriter looks through it, does their due diligence, now it's approved. It's a little different. So you have two distinct dates, 17 days in California for inspection contingencies and 21 for loan contingencies. And then after that, if you've released all contingencies, your EMD's in trouble. So I hope that answers.
All right. Priscilla Vasquez, do you know any good realtors in San Antonio, Texas?
Yes, we do.
Ashley Elaine, my credit is 637. Can I get a home?
Yeah, all day, Ashley. What's your income?
Jasmine, what's a good credit for VA?
Jasmine, here's some good news. VA technically doesn't have any FICO score requirements for the VA loan. It's the only loan like that because VA is residual driven. It's not FICO driven. Now, that being said, if you have a very low FICO score, it will reflect in pricing, which means you get shitty rates. So the answer to that is 780 or better FICO. But if you have a 540, let's try it.
Yep. Landon Jones said, I just want to see if my VA gets approved. That's it.
I don't know what that means.
Kicking tires.
Yeah, if you're kicking tires, yeah, use another loan officer. But when you actually want to get a deal, I'm your guy.
James Nieto, keep in mind for 580 score, 3 months reserves, have seller pay closing costs, come up with down payments. Keep in mind 580 score, 3 months reserves.
I think it's a loan officer. Yeah.
Costs, come up with down payment.
580, 3 months.
Ashley
reserve.
Lane in Tennessee. First
no,
time
he's
buyer.
right. Let's address that for a second. If you have a 580
no,
FICO.
right. It's not an absolute.
The 3 months in reserves?
Yeah, it's not absolute.
Okay, all right, cool. Well, I'm just going to say a 580, you don't get the best loan. You don't get the best loan. A lot of people run around going, hey, I can do an FHA at 580. In a really good lending environment, you can. In this lending environment, if you walk in with a 580 FICO, it's difficult to get your file approved. Very difficult. Why? Because you earned that 580 FICO. Somebody trusted you with credit sometime in the past, and you did not pay it back the way you were supposed to. Because of that, you have a 580 FICO. And you can't turn around and go, hey, bank, bro, trust me, I'll pay you back. Lend me $500,000. And they look at what you've done in the past. They're like, but you didn't pay these guys back. Yeah, trust me, bro, I'm good. The bank goes, yeah, I'm not so sure. We're going to throw some extra things on you. So what this guy, probably a loan officer, was going after is sometimes DU will say, hey, I need 3 months reserves. Sometimes DU is the desktop underwriting. That's the automated underwriting system. And it comes up with its rules that are set from the back. And we get to see the rules. And we say, hey, we need 3 months reserves. And it's file dependent. It's not, you're right, it's not 100% dependent. But that 580 FICO triggers that kind of stuff.
Ashley Lane, in Tennessee, first-time home buyer. My credit is 637. Do I have any chances of getting a home loan?
All day, every day, Ashley, give us a call.
Oh, God.
What happened?
You just jumped on me.
Oh, dude.
All right. Living Luxury. How you doing? AV1R. Banks give the best rate to people who have money to show.
Yes, they do. Lending is a business. It's a for-profit business. If you have a great FICO score, that means you're low risk. You pay your bills. If you have money in the bank and you don't really need the money, you're a low risk. You don't really need the money. They don't do it because you need it. I got a breaking news for you, and it's going to hurt some people's feelings. The bank doesn't give a shit about you.
All right,
they don't care.
Let's keep going. User 7358.
That's how he stops me.
Can I get a VA loan if my disabled vet father is primary signer for my wife and I?
Are you a veteran? That's the big question. So the veteran can get a VA loan. If you are not a veteran, can you be on a VA loan? Yes, but you need 25% down of your half. That's a lot of loan officers don't know this. But can you have a non-veteran on a VA loan? Yes, but the VA insures 25% of the loan amount, and the non-veteran must put 25% of his half. So if you're buying a $500,000 house, cut that in half, $250,000, you must put 25% of $250,000 or $65,000 down. And most people go like, screw that. VA loans are for veterans.
Cassie, we went into contract in July. We closed 8/20. Since rates changed, will it change for us?
Are you locked? That's it. If you're locked, that's what it is. If you're locked, now if you close 8/20, I might be able to pull that off. Let's say you're locked at 7.25% and you said, hey, Mr. Loan Officer, give me a locked LE at 7.25%. And you sent that locked LE to Chris. Chris would go, hey, back office, can we beat this? And we go, hey, we can get you 5.25% for this little bit of a buy down. 7 days is kind of tight, but we might be able to save you tens of thousands of dollars.
All right, give us a call. Max Martinez, how soon can you close on a move-in ready home?
Fastest legally 11 days.
Ashley Lane, around $35,000 a year self-employment.
So, Ashley, you're going to be...
including my husband's income, we both are around 90.
So we need to see your tax returns, because if you make $35,000 a year and that's top line, everybody has write-offs. I need to know what your AGI is, what your adjusted gross income is for 2 years, because we need to know what you're making. So after I see your 2 years of income, I'm able to tell you what you can buy.
User 5030, is there first responder programs for home loans?
There's a bunch of little programs out there. They're all a bunch of bullshit. Get a good loan officer. He'll tell you why.
Jasmine, thank you for answering. You're welcome.
Appreciate you, Jasmine.
Motomami, I live in Florida, but I want to buy a house in another state. How does that work with getting a loan?
Pretty simple. If you're moving from Florida and you're moving to Tennessee, all I have to do is show that you can make your living in Tennessee, and I can put you in a primary residence in Tennessee. Simple.
Yeah, Wiseman, how you doing?
We're great to see you, Wiseman.
Gen Z conservative. Will housing prices drop within the next year?
Not in a million years, I don't think. I think we're going to have a massive spike in housing prices. A massive spike.
Yeah. User 5030, 80K yearly. I got 90,000 saved, 817 credit, no debt. What can I get?
I'd say you start at 410 to 480, somewhere in that range. 410 to 480.
Fred G, do you speak Spanish?
I speak a little. Yo puedo hablar un poco español, pero yo tengo un Martha. Martha's primary language is Spanish. She's on our team. She'll talk with you.
Moto Mommy, you're welcome. Lambo, best affordable places to live near Tampa, Florida as a 20-year-old.
If you're Lambo, what the hell do you need an affordable price for? You got a Lambo.
Apartments.
Yeah.
Apartments.
No apartments. Can't help you, man.
All
you
right,
know what? We appreciate you. We're in Chris and Lee. We are out.